Good afternoon, traders. Welcome to none other than Stock Market Movers. I'm ready to go ahead and start diving back into what's going on out there. We're definitely going to look to see. Today we got topics: oil bouncing back, the tech rally failing to hold there, Russia, and of course Nord Stream 1. China regulation, Amazon, housing, options, inflation. We got it all today. We got two guests for you, like always, right here on Stock Market Movers. We bring the experts that keep you guys in the informational edge. Guest today at 1:15 is going to be Brian Overby, Senior Options Analyst at Ally Financial. And of course, we also got at 1:45, don't miss it, Shawn Cruz, Head Trading Strategist at TD Ameritrade. We got another great one for you guys. Smash the thumbs on up. I've been kind of not getting the likes that I need, so do me the favor, guys. Start it on up. Get those likes going, and welcome to none other than Stock Market Movers with Money Mitch. Let's dive on in.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, welcome to it. Let's go ahead. Let's put on the topic so that you guys can see what we'll talk about today. Like always, we got another week, an action-packed week. We're going to be paying attention to a lot of things. I'll go through the list in a second here, but a lot going on. You know, we got that recent jobs number. Some people were looking to see if it was going to come in hot or not. It showed that at least right now in the job environment, it's still strong, even though we're seeing more and more mentions of what layoffs, right? And so keep this on radar. We'll see if this kind of changes leading into the week. But of course, we got a lot of important factors that are going to be hitting this week. We'll talk about the economic data. We'll talk about the earnings. Right now, the SPY is bouncing a little bit. So want to go ahead and take a quick look at the overall market, see what we're seeing out there. You can see how the SPY is bouncing towards the 386. I had a feeling we would get a run into the afternoon. I even put it out on my Twitter. I was like, are we going to get that afternoon run that we've been getting consistently? Looks like we're getting it right now. Stocks that were definitely hit hard today. We'll talk a little bit about that. Let's dive on into that. So today, tech getting hit hard after the NASDAQ had its fifth straight day in the green last week. But growth names also taking a hit now, down big as ARK down about 6%. Let's go ahead. Let's take a look at some tech names and some growth names getting hit here. Let's take a look there. SPY Technology down about 2.05 overall and about 1.33 from the open. Hasn't really recovered yet. Names like right now, at least, Apple down still, Microsoft down, Google down here. Tesla was really kind of lagging back there. Meta down about 4%. We'll talk a little bit about that one coming on up. NVIDIA down about 350. So a lot of these kind of really getting hit hard. And if you take a look at the Qs, you'll see that a lot of these definitely got hit hard. Tesla down about 6% from the open. They started above near that 760 level, almost down already to that 760 points down there in Tesla. This is why a lot of people say that, you know, you can't make a lot of money on a trade like Tesla. Well, I definitely don't think that's the case here. I know a lot of people sometimes feel they can't make money on Tesla because they can't buy a lot of shares. But hey, even one share would have made you $60. And what you had the risk for that one share, maybe that $10 there. So just to kind of give the outlook there, it's like a 6-to-1 on that outlook. That's what matters more to me in this case than how much you put in it. Like always, it's about the profit to loss ratio. I think it was a great opportunity to the short side today. Let's take a look at ARKK and what got hit the most here. So what I'm going to do is I'm just going to put it by the percentage change, what got hit the most, and then we can go down some of these growth names. Names like Berkeley Lights, NVTA, Coin, oh, good Lord, right back down there. Shop down about almost 9%. Zoom, that was starting to look good, zooming right back down. Roblox, right back down after a really good week. Also Unity coming down there. Roku almost down about 9% there, about 8%. So we won't go too far, but definitely a lot of these growth names just getting hit right back down after bouncing for a decent amount of time. Like even T-Doc, right back down about 5%. Square, down about 5%. A lot of these stocks are just getting hit hard on the downside. And a lot of that showing us what? The growth trade coming off. Is it completely off? No, I would not say that unless ARKK really breaks through the 40. And if you see that, then okay, then you can say, okay, now I'm looking for this to continue on the downside. But it bounced off that 40 last time. We'll see if it can get back towards those levels this week and break through 40 and head down towards 36. That would be the breakdown there on the chart. How we doing in the chat? What's going on? Andy, good to see you here, man. You're going to the moon, says your owner. Hey, can't go wrong. Let's do it. Easy here in the chat. Appreciate you guys. Ray, Mullen. I don't think we'll be mentioning Mullen anytime soon, but appreciate you coming into the stream. Let me know what stock caught your eyes today, and I'll make sure to cover it. All right, let's get into some of the economic data that you guys should keep on radar this week. Last week, we did get the U.S. economy to add 372,000 jobs, while unemployment rate held steady at 3.6. This leading into the economic data this week. Of course, what do you need to watch? You need to watch CPI, Consumer Price Index, coming out for June. Year over year, we have an 8.8 expected and an 8.6 previous. So you want to keep these on your radar. Of course, you guys can look a little bit more into, instead of the year over years, you can look into the month over month numbers. But keep on radar after Wednesday. On Thursday, we'll get initial jobless claims. We had 235 previously. 235,000 previously. So keep that one on radar. We'll see what happens there. After Friday, you'll get into some other details here. We'll get retail sales. We'll also get producer price index, so PPI. Pay attention to that. And then also you'll get released the University of Michigan's consumer sentiment. I think this is an important thing to keep on watch as we look to see if sentiment is changing or is it heading continuously in the negative direction. That's what we don't want to see. We want to see if maybe we see a little lift in the sentiment, but that hasn't been the case so far. Oil is going to be so important, but nothing's going to be probably more important right now, at least in the situation that's going on in the natural gas. I think you got to pay attention to see what happens here. There's a lot going on. Let me go ahead and explain a little bit about this. So Russia operator Nord Stream 1 confirmed that the maintenance work, which are scheduled to run from Monday through July 21st, got underway. Why is this important? Because what this is going to do is it's going to bring Russian gas flow to Germany, expected to drop to zero later this day. After that, I think the next thing to watch is the Europe fears, right? The fears of suspension of deliveries could be extended beyond the 10-day timeline. This would, of course, derail the region's winter supply preparation as Germany is in a real bind here. Russia's state-backed energy giant Gazprom cited for the delay of the return of the equipment serviced by Germany's Siemens Energy in Canada for its reduced flows. So Canada said over the weekend that it would return the repaired gas turbine to Germany for the use in Nord Stream Pipeline 1 while expanding the sanctions against Russia's energy sector. Russia said last week it would increase the gas supplies to Europe if the turbine being serviced in Canada was returned. So something to keep on watch. We'll see how this performs. Let's take a look at oil today. Is up on the day, has been pushing since the pre-market. You can see it started taking off, went up there towards 56, holding well on the pullbacks right now. We'll see if this can continue to drive towards the end of the day. Of course, you guys can watch a couple of names here in natural gas. There's a lot to look at. but also you can watch UNG to see how that one performs if you want a cheaper name. It's kind of trading hand in hand right now. All right, let's go. Yes, I see you. Let's keep going. I see you, Brian. No worries. Only thing that let me see. Camera. All right, just checking in on Brian there. He's going to be coming on at 1:15, so stay around, guys. We'll be getting into some options action coming right up. All right, let's keep going. Let's take a look at some other headlines that are moving stocks out there. So unfortunately, and you guys, we're seeing that trying to trade completely fall off here. A lot of this coming after heightened COVID trends in China. If you can see, stocks today really got hit like when the casino stocks after the trend in China is going in the wrong direction, in Shanghai detecting the first case of the BA.5 subvariant and Macau closing casinos for a week, definitely affecting these stocks. LVS is the other one, Las Vegas Sands. You guys can see how these were really hit hard on the downside. But that wasn't all in China news. At least it's important here to note that the regulation concerns are back after the State Administration for Market Regulation on Sunday imposed fines on the technology giants Alibaba and Tencent Holdings, among other firms, for failing to comply with its anti-monopoly rules on the disclosure of the transaction. The Chinese market regulator released 28 deals that violated this rule, with 5 cases involving Alibaba, including the 2021 transaction of purchase of equity for its subsidiary Youku Tudu streaming platform. So coming in again and hitting these stocks on the regulation. And you guys can tell me, how do these stocks perform today? How do they look? Look at this daily candle you got on Baba today. Right back down there. JD also breaking through the support through the 60.94. You can take a look at PDD, also strong candle to the downside after holding those gains. And it wasn't only these. Also, you saw the China EVs really start giving it up. XP EV is another one that I'd kind of keep on watch. Look how that's coming down. LI, that was really strong lately. And you can see here on the weekly, look how strong it was. It was really strong. Now giving up a little bit of the gains. We'll see if it gets back towards support and kind of starts cracking down through here, through the 36 level. I'd keep LI on radar as it's been made a giant move in the last couple of weeks. All right, in a second, we're going to get into our interview. Of course, if you guys haven't been watching, I'm going to keep on watching some of these Chinese names, but I did take a swing today, so I want to go ahead and we could talk a little bit about that. Full disclosure, still in this one, going to go ahead and see what we close up on the day. I am long on Walmart, taking a swing on this one, really close towards this 125 level. The biggest thing I've talked about is I want to see a close back above 125.50. If we can close back above that, that's going to be interesting to watch. Of course, this is in discount stores. We'll see how these kind of perform. And coming up next, when we get into our interview with Brian, I'm going to actually ask him about a stock that he was looking at a couple of weeks ago in June, and it was exactly in discount stores. So we'll see what happens there, and we'll see if these can continue their move back up. BJ is also one that I've been watching there, and we can see a nice little couple of days here for BJ as it gets started. I kind of watch to see if Costco kind of follows suit, and you see Costco really start pushing, getting back up through that 200-day moving average. We'll see what happens there. All right, give me 1 second here, guys. I'm going to go ahead and play a trailer and work on getting Brian on, but don't worry, I'll still be right here, guys. Let's hit that BZ promo and be right back.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, so we'll keep watch to see what happens in these discount stores and the market overall. I've been watching to see if we're going to go green on the day. We're trying to get back up there. One thing I will point out, I always pay attention to what's open from the what's up from the open here. And basic materials is starting to get into the green. You also got utilities that had been doing well. Names like Duke, I saw earlier in the day, were up and they've continued to be up. We'll see if basic materials can continue green. The only thing I see in the industries wise there are lumber and agricultural inputs. So if you're taking a look at some of those, you can keep on watch names like CF, MOS on agricultural inputs. Those don't look too bad. Starting to get a little bit of a push. And I did see earlier in the day steel up. How those can end the day, I'd keep those on watch. You can see X pulling on back there. We can see Cleveland Cliff pulling on back. We'll see if we can get back on the day. All right, let's go ahead. We're going to dive into our interview. Let me know by hitting the like button in the chat if you guys are excited to talk about some options action. I know options are a lot of what you see beginner traders trade and advanced traders, right? And so we're going to dive on into here with none other than Brian Overby. He has been on Money Mitch before, so I'm excited to have him back on. He's the senior options analyst at Ally Financials. Let's go ahead and bring on Brian. How we doing?
We're doing great. Thank you so much, Mitch. I had a little bit of an issue trying to get online here, but I just had to get off our VPN, and now we're ready to rock and roll. Let's talk some options.
Let's talk some options. Let's go ahead. Let's start rolling here. Let's get into it. Now, first things first, I do want to give the chat a lot of kind of different areas that I want you guys to check on out. I'm going to try to include all these links in the description so that you guys can touch it. Things like option trading strategies for beginners. We're going to touch a little bit about covered calls. And so Ally does a really great way of you guys checking out and learning some information. So I'll include some resources in the description. I know Brian's all about that. So let's go ahead. Let's dive on in. First thing I want to know is, how do you see this market and where do you think we're going from here?
Well, it's hard to say where we are initially going. One of the things that I dislike the most about the market is we've never had that big flush out. And that was actually distributed by the VIX index. The VIX index has never gone up since the downturn above that 40 level. I'd really like to see it get to the 50 level, have one big flush out and give you some of that capitulation that we really need to try to fish for a bottom in this marketplace. As a matter of fact, the VVIX, which a lot of people might not even know of, that's the VIX of the VIX, actually hit a new low since the pandemic recently. So by looking at the VIX, even though we're in a higher volatility range, it still doesn't show that nervousness, that flush out. And as far as the market is concerned, I'm just trying to look for bottom pickings as far as using options to try to pick bottoms in stocks that I like. And that's what what I've been talking about on a lot of my shows on my YouTube channel and everything is, how can we use options to try to find spots to buy these stocks that we like in industries that we like, even if there is a recession? What stocks might we like at this point in time?
Definitely. One of the things that I've been watching is how we're going to get on out of this. I like how you're pointing the VIX there and keeping an eye on at least having some level, right? What are you looking for that bottoming action? I think it's important to have some certain things that you're looking for to kind of point towards the bottom. One of those being the VIX. I think above 40 is definitely what I'm looking for too. When do we get there? Who knows if we even do, or at least for the time being. That's the important part. Now, one of the things that has been talked about during this downturn is looking for good, cheap stocks. Does that ever even exist? I don't know. Let me know, Brian. Do you see anything that look like good, cheap stocks out there?
All right. Well, I'll talk about a couple of the strategies. Now, my motto recently has been fear of missing out, right? So where can we allocate some capital that would allow us to participate if we got that downturn in a specific stock? Now, Ollie's, which is a bargain shopping place, which is very heavy where I'm located here in Charlotte, North Carolina. In the South, they have a lot of stores. And they're the benefit of a lot of people of these excess inventories. We saw Target come out get killed on their earnings because they said that they mismanaged their inventories, and in particular, big ticket items. Now, Ollie's has a lot of cash on hand, and they are one of the companies that comes out and actually buys that excess inventory and then, puts it on fire sale. So that stock, after Target announced, Ollie's, you could assume that Walmart was going to have issues, and they did too, and some of the other bigger retailers. So we talked about looking at a cash secured put to try to bottom fish a little bit on Ollie's. Now, it's been a very strong stock, actually stronger than I had anticipated. But one of the strategies that we used on Ollie's was looking at a put spread, because it was very volatile. It's not a big ticket stock. It's not very well known. Options are not as liquid as I would like. But we talked about this on the stock play of the day on June 4th, and actually doing a rinse and repeat strategy, trying to pick the bottom on that. So that's one of the areas, just looking at the news headlines, inventories, what's going on in the marketplace, where could we allocate some capital? And then pharmaceuticals. We also looked at a stock that was on the 28th. We talked about Pfizer. And in that stock, we actually just sold a cash secured put. We didn't worry as much about the put spread because the volatility isn't there as much as it is on a stock like Ollie's, which is a little bit, less liquid. So we just looked at selling a put to try to buy the stock at a lower price. And that was back on June 28th that we looked at that. And then we had two pretty mega cap stocks that have announced stock splits. And so one of the big ones was Google. And when they first announced, the stock ran up above 3,000. Right now, it's about 32.25 or 32.30. I guess we're live we're live getting live quotes. So with that said, though, we had the big run up on the news on the stock split. Now nobody's talking about it, and that stock split is happening. So I actually went way back after the stock split announcement. We used a long call spread, a total fear of missing out, right? I'd like to participate, very expensive options, very expensive stock. So we looked at buying a long call spread. That trade hasn't really worked out, but now we're running into the actual split. We saw a little bit of a run up in Amazon. Hopefully we might get a little bit of a run up in Google. And on tomorrow's show, we're going to talk about how to adjust that trade from way back in February, which was amazing that they announced that split. And it looks like the actual split adjustment date is going to be July 18th. So a long period of time. And once that happens, then maybe, just like we talked a little bit about on Amazon on my show, look at buying a deeper in the money call. Basically buying a leap option, a longer term option, and going out further in time, let some of the volatility premium come down. And these are just all, in my mind, these are all fear of missing outs. These aren't speculative trades. These are ways to use options to try to pick bottoms and participate in stocks. Like, it's awesome to be able to look at that in Google and Amazon now, because they're going to be, south of $200, and they're very feasible to trade options on, as opposed to a $3,200 stock, which means you got extremely expensive options to go along with the stock.
Definitely no worries. Two there that are definitely on the radar, definitely with the Google split coming in. And correct me if I'm wrong, that's the 15th?
Well, the 15th is when they do the book work. So that's always on a Friday. And then they trade split adjusted on the Monday, which is the 18th.
Perfect. It's something definitely to watch. I mean, we saw how Amazon reacted, and then we'll see how it reacts after the split too. Right? Is it kind of more?
Did have a downturn after the split, but then I just thought of that as, once again, more of an opportunity. These are companies that are stalwarts. They've struggled in times of recession, but they've always, after the fact, usually done well as you go in the long term, obviously, by looking at what their stocks have done over time.
Perfect. Now, one thing that I have included in the links, and you guys can check it out later, is some of the beginner trading strategies for options. I think definitely go to the website and check out more. But of course, you guys can also just stick on YouTube. I know how we're big YouTube fans here. So you guys can watch all the content that Brian does on for Ally. And I think it's definitely great to check out. I included one YouTube video link there. But let's dive into a little bit about what covered calls are and why would you use this strategy?
Well, okay, so now I've been kind of combining covered calls a lot with the cash secured puts. So, for example, we're talking. Let's use Pfizer. That to me, that's a decent covered call stock. You don't have when you're looking at covered calls, you want some volatility and some predictability, right? That's kind of an oxymoron, but you want to be able to get some premium for selling a call option. So you need a little bit of volatility, but you don't want it to be too crazy. So what I'm doing when I'm selling covered calls is I'm targeting a price above where the underlying stock is at. And I'm saying if it gets to that price, I'd be willing to sell my stock at that price. You have to have 100 shares of stock in order to do that. But a lot of people, after they've bought stock and hence selling a cash secured put in Pfizer, if I get put to stock, I get the income from selling the put. Then I also get the income from selling a call. And you're just basically trading within a range. If it goes up, that's all right. Take my stock away. I get the cash from selling the call, and I sell the stock at a higher price. So covered call selling. If you have, especially in this marketplace with the VIX trading, well, at this point north of 25, with the VIX trading at that level, you have higher volatilities in general. And if you're looking to try to sell some stocks that you may have gains on, I think covered call writing is a very good way to do that. Generate some capital now. If you sell that stock, then you can wait till you feel a little bit more comfortable about the marketplace and look to allocate it elsewhere.
All right, now I saw this question and I thought it was an interesting one here. Is outright buying of a call speculative or a conservative strategy?
Actually, I have a slide in a PowerPoint that says that exact same thing. It's all about the mindset of the owner. If you want it to be speculative, I have a very popular white paper that I've written that still gets a lot of play. I wrote it 5 or 6 years ago. And one of the biggest mistakes is buying out of the money calls as your first trade. And that's basically you're speculating on that movement in the short term. It's possible to buy out of the money calls, be right on a forecast, and still lose money on that option. So if I'm highly leveraging myself and buying those cheap options, you get what you pay for. You just don't get a lot of activity. Basically, my rule of thumb is if you don't think the stock can get to the strike price that you're buying before that expiration date, then you don't want to buy that call option. And a lot of people just buy them blindly, thinking that if the stock goes up, you're going to make money on that call. And that's not necessarily the case. So inside the options playbook, the book that I authored, we have a section in the rookie section actually talks about buying in the money longer term options as a substitute for the stock. So you're looking at going, well, to use the term delta, we're usually looking at something like a 80 or 75 delta, something that acts a lot like the stock. Means if the stock goes up 1, your option contract will go up 75, 80 cents along with that stock price. That means you're going deeper in the money, you're paying more for it, and we treat that as a surrogate for owning the stock. So is it speculative? Is it conservative? Well, the speculative person hangs with buying the out of the money calls time and time again. Fear of missing out type strategy on a stock like Amazon. We actually did a stock play of the day after the split, talking about buying deeper in the money options on Amazon because they're very fairly priced. So you limit your risk to about 10% of the stock price. You get fairly good action if the stock does go up. And it just gives you a little bit more alternatives as opposed to just buying the stock and holding overall.
All right. Well, I will let you guys know. Definitely pay attention to the YouTube. I think Brian's going to be working on some ways that you guys could be watching that Google split trade. So keep that one on your radar. Last thing I have to mention is, have you been seeing any strategy just more consistently work in this market environment?
Well, you know what actually, well, here's a weird thing. And I'm just going to go out on a limb here. So the actual volatility of the marketplace has been higher than what the VIX has been implying. So the real market moves have actually been larger than a thing like the VIX has implied. So now I just repeated myself. But bottom line is that means that if you're buying premium, if you're buying straddles and strangles, if you're buying those type of trades, those have done well in this marketplace. I actually, on one of my shows, we talked about Micron Technology when it was looking at setting a new high. It actually a new high that it hasn't, I think it was, I'm not 100% sure, but the highest that it's been in like 10 years. And we say, well, if it breaks out, well, then I want to be long a call. But if it doesn't, it's going to fail miserably. And that's what happens. So buy a call and buy a put at the money and not going out that long in time. You just want to see if it breaks through that precipice to the upside, or if it bounces and hits it and then gets ugly to the downside. And that was one of those stocks where that trade worked out. It's tough to buy premium. It's hard to manage those trades because if one's winning, the other one's losing. But oddly enough, long straddles, which I very rarely talk about on my show, Stock Play of the Day, but long straddles have actually been the winner in this marketplace, more so than seeing that volatility and saying, oh, I'm going to just sell option contracts.
Love it. There you guys have it. Not just the calls, right? There's plenty of ways that you guys can be approaching and making money off volatility. Perfect way there. Brian explaining it. You guys go check it out. I did include the kind of the option center that you guys can find all the education right there in the chat. So you guys can click that and definitely check out the work that Brian does. Appreciate you coming on, the senior options analyst at Ally Financial, and we'll definitely have you back on, Brian.
Well, thank you, Mitch. I really appreciate it. I love the show.
All right, let's keep on going. That's what it's all about here on Stock Market Movers. We're trying to get to 2 experts every single day and touch all the headlines. So let's go back to the headlines. I hope you guys got something there for options trading. And if you guys have more questions on options trading, feel free to go ahead and hit the comments below or hit me up on Twitter, and I'll definitely reach out to Brian, or you guys can do so yourself. Let's continue going. Let's get into the other headlines. Of course, we can't miss out on talking about Elon. You can't miss out on talking about Elon any show nowadays. But let's go back to it. Let's take a look at Twitter. How's it trading on the day? Has been down big in the pre-market. Came down a little bit. We got about like a 4% move down. Let's take a look here. Of course, this is coming on the heels of Elon pretty much coming out and saying that, you know what? Here it goes. I'm trying to terminate that $44 billion deal. This is coming after confirmed that the number of bots and fakes account. Twitter, on the other hand, did say that it has given Musk the information he needs to assess its claim that the spam accounts make up for only 5% of the monetizable daily active users. I think this is an important thing to kind of keep on watch to see what happens, of course, with Elon. He did kind of put out a tweet, and it kind of explains kind of his strategy in the outlook of this deal. And you guys can see it here from his tweet. He said they said I couldn't buy Twitter. Then they said I wouldn't disclose bot information. Now they want to force me to buy Twitter in court. Now they have to disclose the bot info in court. So you guys see here, I think he's going to at least his lawyer is probably pushing on the fact that if they're lying about their bots, that should be his kind of out there. We'll see what happens. Of course, this becomes a legal battle. So I think the real winners here are going to be the lawyers, but we'll see what happens in the Twitter situation, of course, with Elon. All right, in a second, we'll be getting on up in here about 1:45. We'll get to Shawn, Cruz. Let's go ahead. Let's keep getting to some other headlines out there. The downgrades are coming in bunches lately. And so if you guys are seeing a lot of downgrades come on in, looks like the analysts, they say sometimes analysts chase price, and can't blame that for them because they're taking their shots on the downgrades coming in. Jeffries coming in on a downgrade on Lululemon and Under Armour. Let's take a look how those performed today. Lulu here Lulu coming down pretty significant amount, in the intraday. It's kind of trading sideways now, but we'll see how this continues to trade. This one was downgraded on cut to underperform from hold. Jeffries noted increased competition and easing of COVID-related spike in demand. Also noted was Under Armour, right? If you take a look here at Under Armour, it's down there to 760s. This is a stock that at one point was trading up there to 20s. And if you guys remember, this was a favorite for a while as coming back and was going to compete with Nike. And you were hearing mentions like that. And you're seeing now Under Armour down below $10 and can't catch a break here. Down big here in the pre-market and continuing on the downside here, Under Armour. And they were stated here, downgraded from hold to hold from a buy on concerns about management volatility and lagging fundamentals. Also mentioned in the downgrade was Meta. And you guys can see Meta definitely getting hit hard there. So we're going to keep this on watch. It's not only kind of some of these stocks, you're going to continue seeing a lot of these take hit. Needham downgrading the stock here from hold to underperform for Meta and stating a couple of things that I think we should keep on watch. In Under Armour, they did state that it was volatility and lagging fundamentals. In Meta here, Needham stating that there's deteriorating fundamentals and structural risk. So he said that, and this was by their analyst, that we lowered our estimates because we believe cost growth will far exceed revenue growth for the next 2 years. That was from Martin, an analyst at Needham. And I think this is important to watch. A statement saying that in the next 2 years, I think that's definitely vital to the business. We're going to see what happens on the business. Where does it stop on the downside? I'm not sure. I don't know if you are going to see the pandemic low. That was down there towards, let's say, 144s. We'll see if it can get down there and break through the 150s again. This looks very bearish to me still. Meta, at least for right now, is on the downside. We'll see if it can continue that downside action. All right, let's go towards the next headline here. Amazon coming in the news here. Let's go ahead. Let's take a look. After Bloomberg here citing that U.S. Prime customers have stalled in the first half of the year, possibly in part of a $20 membership price hike that took place in February, as you're seeing Prime numbers come down. And I mean, it's Prime week, right? There's supposed to be sales on this thing right now. We'll see if Amazon can come on up. You guys can see on the daily chart, we've fought many times down there at the 105. Do we break down through 100 on Amazon? I think that's what you got to keep watch. Anything above 130s will get me a little bit excited for a pushback there towards, let's say, 160s and 170. But for right now, it is sideways and could come down and take out that 100. We'll see what happens in Amazon. Of course, there's a lot going to go on, and the earnings are going to matter drastically to what happens on Amazon. All right, we also got housing news. We'll touch a little bit of housing here. Housing news here coming on in. Let's take a look at Lennar. This one that I've been watching, how it's going to perform after the earnings. It did dip for a little bit, now holding the gains there, trying to continue its way on up. Housing news here coming that the share of sale agreements on existing homes canceled in June was just under 15% of all homes that went under contract. This coming from a news report from Redfin. So keep this on radar, right? If you take a look here, look how Zillow's been coming down here significantly. Open down significantly. Redfin, that's the there you go. RDFN down there towards 870s. And you can see in pre-market, it was already leaking there. And just showing us more and more how this housing is really starting to become a concern. Of course, what are we possibly going to see later in the month is continued mentions of the Fed hiking the interest rate and continued hikes of interest rates. And if you see more and more mentions after the jobs number was what? That the Fed will probably remain strong on fighting inflation. So a lot of this is going to be dependent on that CPI data that we get. But of course, we'll see what happens with that. That's coming in on Wednesday, and keep these on your radar. We do have earnings stocks that will be coming out right later this week. Let's take a quick look at those before we get into our interview. So first one we're going to take a look at is PepsiCo. PepsiCo will be coming in before the market open on Tuesday. So pay attention to that. We'll see how this one performs. Then we get really started on Wednesday with Delta Airlines. Before the market open, we'll see if these airlines can get off the floor because they need some lift off after recently. And you can take a look here at the quarter. The quarter was really bad here for Delta. It was up near towards the top there, was holding the range, and then really just started heading back down to pandemic lows. We'll see what happens on Delta and the other airlines for that mention. As we get into Thursday before the open, we'll have JPM and some other banks come on through like Morgan Stanley and First Republic. You guys can keep on watch what happens with the banks as we start reporting there. And then on Friday, we'll continue with Wells Fargo, with BlackRock, and other tickers like this. So keep that one on watch. As you see others come on in here, PNC, Citi. It's going to be important to watch how these banks are performing. Do we just see these earnings just continuously just get pounded on? I think if they do, I think we continue to see some downside in the overall market. But like always, you never know in this type of environment what's going to happen. As you guys can see, we have been pushing since about 1 p.m. Looks like we're having that afternoon rally. We'll see if it lasts. I've been seeing this pattern happen often where we get an afternoon rally. I can even show you it here, guys, into the 1 p.m. till about 3:10. We went up and then started fading. So a lot of the times I've been seeing a move up at 3 p.m. until the afternoon around 12 or 1, going until about 3 or 3:30, and then boom, seeing that tick back down a little bit, showing me more and more that probably there's some day traders there making some money on the upside and selling into the move. That's why they probably sell right before the bell because they don't want to hold overnight. And I've been seeing this pattern consistently happen. We'll see if it changes. All right, let's go ahead. We're going to dive on into our interview in just a few seconds. We got about 2 minutes for that. Do want to take a stock from the chat if you guys want to take a look at it. Looks like BlackRock should get hammered, said easy. What are you guys taking a look at? Looks like OP X. All right, X dividend next week. Let's see what you guys are looking at. Baba getting hosed, that's for sure. Mike too far away, says John Moore. I can come a little closer there. Sorry about that if it wasn't loud enough. Let's keep going here. Tesla being mentioned in the chat. Oof, it's a tough one. Tough move down today. Bounced off the 700, so it's a good level to at least bounce off of. Now I just need to watch this 9 EMA. Do you get back above it? That's the 715 area. That's what I would be watching tomorrow. If you can get back above that, maybe you can start trending towards the upside again. But really, you need to keep watch above the 750s. That's where we kind of rejected here. And I was looking to see if we were even going to get into the 768s, but we didn't even get close to that. High of the day is towards 764. So definitely the rejection off the 60s is where you saw that kind of crack right back down. If it cracks 700, though, you could be right back down to 650s and heading towards the break of the kind of bear flag that I see here on Tesla. It's more of a bear pennant. I would call it more of a pennant than a flag. But we'll see if Tesla can hold and get back up there, or do we see continued downside in these? I just don't see EV as being the hot move, at least for right now. We'll see what happens. All right, let's go ahead. Let's play our little trailer and get to our interview. So definitely do me the favor, guys. Smash that like.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates. and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, team, let's go ahead. Let's dive into our next interview. Do me a favor, guys. Give him a warm welcome. Let's bring on Shawn Cruz, head trading strategist at TD Ameritrade. Welcome to the show.
Hey, thanks for having me on.
All right, let's dive on in. First, I want to ask you just overall, how are you feeling about the market action today? And what are you looking for this week? What's on your radar?
Yeah, I mean, I'm not surprised after some of the headlines we got out over the weekend. If you think about I'd say the two big overhangs in the market, anything going on with Russia as far as energy, and then anything going on with China lockdowns and any other instability that can come out of there. We got negative headlines on both of those fronts over the weekend. So I wasn't surprised at all to see us down today. Not surprising to see NASDAQ leading slower and some of those names that are a little bit more based in China or have a lot of exposure to China, either on the sales or the manufacturing front, are also, I think, leading us lower today. So not surprised to see this, but I think overall, if you want to look at maybe say the S&P 500 more broadly, you're going to want to keep an eye on, I would say, three things this week. One is going to be the CPI report. It gets too much higher, then that could really scare markets and maybe the Fed has to be more aggressive. But if it ticks lower, that might actually be a little bit of a cause for a rally. The other thing is earnings. Start getting Pepsi out tonight, which that can be a really interesting name to watch. And so Pepsi, last time they reported a $540 million impact from currency adjustments. And that was just with the dollar going from 95 to 98. Since then, the dollar's gone up to now threatening that 108 level. So I think if you're looking at 540 million just in that 95 to 98, we're up 98 to 108. So about 3 times that, or a little over 3 times the size of that move. So the currency adjustment is going to be big. And then also they reported a $240 million charge based off having to cut off a lot of their business in Russia to see if there's any more of a write down that comes as a result of that. Just those 2 items are going to be really interesting to watch. And that can actually move the overall market because everyone knows there's going to be an impact, but nobody really knows exactly what the extent or how severe that impact's going to be. So Pepsi will give us they're a big international conglomerate, sell globally. They're going to give us a pretty good look at what exactly we can expect for a currency impact. And then later on this week, we also get retail sales. I think that's going to be another interesting metric to look at just to see how this is really impacting the consumer here in the U.S. with the price elevation just getting to some of the levels that it did over the June time period.
I think you kind of mentioned this, but let's get a little bit more into it. What would you think would happen if we do get that CPI under the expectations of 8.8? And maybe what kind of numbers do you think would create drastic change there? Is it a number in the 7s or is it the low 8s? What do you think would it take maybe to see a rally, or also maybe on the opposite side, see us kind of just continue to fall down?
So I think if you come in, I don't think so much undershooting on the downside is as big of a risk. I think if you just come in anywhere lower, I mean, maybe 8.7 will be taken with a grain of salt. But if you come in, I would say below 8.5% for that CPI number, I think you could see a pretty strong rally because that would show that what the Fed has been doing is enough to bring in inflation to the extent they can control a lot of the inflationary pressures that are happening right now without having to tighten policy further. But if you do come in above that, and I don't think it would really take much, you come in at 8.9 or 9%, I think you could see another bout of volatility get injected into this market. And you probably see a pretty significant slide because the market would interpret that as inflation is not coming in. The Fed has been trying pretty aggressively to rein this in, and what they've done so far really hasn't done quite enough. So they might have to do even more. And what's that going to do to growth for the economy moving forward? Probably not going to be good, and that will probably hit stocks and a lot of these more high price stocks too that have a lot of growth expectations priced into them.
Now, recently we have seen oil come down massively in the last month. Do you feel this is kind of all the easy money has been made in energy, or do you feel there's still some room here?
I think there's the potential for some room here. Think about, what these energy companies had to do during the pandemic. They were able to bring their break-even price of oil down significantly back when we had oil, trading in the 20s. It got negative. That was more of a weird futures thing. But when you had oil trading, I'd say legitimately in the low double-digit ranges, energy companies did a lot to tighten up their operations, become more efficient, and lower their break-even levels. So even if you have crude oil at 100 or 90, these companies are still going to be very profitable. They're still going to be kicking off solid cash flow. That I think was the big concern with the energy industry, was just, were they going to make enough profits to pay their debts, keep what is a very capital intensive industry going moving forward. That was a big concern. So even if you get crude oil down to 80, you could still have a very profitable energy industry, but that doesn't mean there's not some froth that could come off the top. And we actually saw a lot of our clients selling out of some of those energy names as crude oil came back down. But I think once you get crude oil to get into a little bit more of a range that is easy to project out, it starts becoming so uncertain which way it's going to break, but we maybe have a little bit more of a steady state price that we can reasonably expect to hold moving forward. That might be where you do see some investors coming back in and finding some good names to buy on whatever that pullback, whatever that price level looks like.
We'll see if we get some of that price stability to come in now. Is there any sector that you feel the opportunity is really starting to show up to start dipping our toes? Of course, nobody knows what's going to come, but is there any areas that you're starting to see, okay, valuations is starting to make sense and we could start dipping our toes in this area?
Yeah, I think if you're looking at the semiconductor space, it's certainly becoming a little bit more of what I would say, a stock pickers type of a sector. It's not enough just to say, I think everyone's going to be buying computer chips, so I'm just going to buy some basket that holds a lot of these semiconductors in there. I think you're going to have to be more selective, but there's been a lot of volatility. If you look at SOX, which is the Philadelphia Exchange's Semiconductor Index, it's still down at depressed levels, and it's hard to imagine getting a major rally out of the NASDAQ 100 if you have the chip makers languishing like they are. But I think right now we're seeing investors, at least from the TD Ameritrade client base, take a little bit more of a selective approach, and they're looking at names like NVIDIA, AMD, that have some of the more, I would say, high compute, high speed type of use cases. And some of the chips and the chip makers that are selling things that are getting a little bit more commoditized and are highly exposed to, just say, the PC market, those are the names that are getting sold. So if you want to find maybe some interesting opportunity, I think the divergence that we're going to see within the semiconductor space can create some interesting opportunities, whether you want to go on the long side, the short side, or use some sort of a long short type of a strategy.
Definitely. Now, what do you think it's going to take here? And I would like to know on your perspective here, what do you think it'll take for you to be like, okay, now we have a bottom in? Are there any indicators that you use or any signs that you're looking for to say, okay, this is it. I feel like the bottom's in now.
I'm going to be keeping an eye on the dollar. So if you look at where all the concern right now, I think what's holding back a lot of these tech stocks is that growth outlook. Those high multiples come from high growth expectations. You're seeing so much concern out of the global economy. It's causing a lot of investors around the world just to flee to the safety of dollar-based assets. You're seeing the euro trade at parity with the dollar for the first time, and I can't even remember. The dollar's trading at up towards 108. The last time I was at these levels was 2002. Just with all the uncertainty that is happening around the globe, that's driving the dollar higher. And so what I think you'll see when things start to turn around, start to recover, the outlook becomes a little bit more optimistic, and everyone's not just concerned about what's the market going to do tomorrow. They're a little bit more comfortable with the glide path of the global economy coming back online. You'll see them start selling dollar-based assets and putting money back into, say, the Euro area, Southeast Asia, and even some of the emerging markets, But what that will do immediately will cause the dollar to start turning around and moving lower. So the dollar is really what I'm keeping an eye on here, almost on a day-to-day basis. I didn't think it had much room to run once it got up towards 105. But we just keep getting some negative data, some negative headlines out from overseas, particularly out of the Euro area with what they're going to be running into. It seems like a pretty big energy crunch. Seeing things like that coming out, it makes sense. You're just seeing more and more investors pile into the dollar, trying to put in lockdowns back in place. Something strange going on with protest outside of a bank, which looks like an attempted bank run. Depositors can't get their money out. Two more big China real estate developers had to miss debt payments on their bonds. So there's something very strange going on in China. Certainly no one's going to want to park the money in Chinese-based assets until we get a little bit more certainty. And then the Eurozone, I think everyone is well aware of all the impacts going on there from the Ukraine-Russia war. Those keep getting worse, and it's just forcing everyone into dollar-based assets. Once that turns around, you'll see it flow right back out.
Something to keep on watch. I appreciate you giving us that global outlook on the dollar right now. So you guys check him out. Shawn Cruz, head trading strategist at TD Ameritrade. I'll make sure to include that Twitter access down in the description. You guys give a thumbs on up. Thank you for joining us today, Shawn.
Thanks.
All right, guys, we're going to start wrapping on up here. We got about 2 or 3 minutes left. So if you guys got a ticker you guys want to check out, throw it up in the chat. This is the show where we go ahead and get through the headlines and, of course, get to the experts that you guys want to hear from so that we can keep in the informational edge. That's what it's all about, getting some opinions outside from the experts. And, of course, taking a look at what I'm seeing out there. We'll see if this continues the way we have on the day. We're starting to rally. Can we close the day green? I'll definitely keep on watch to see if the SPY is going to go ahead and do so. We've had a great show today. We talked about a lot of tickers. Let's go ahead and recover what we talked about. We talked about the oil bouncing back, tech's rally failing, Russia and Nord Stream 1, China regulation, Amazon, housing, options, and inflation. We covered all these topics, so if you guys want to check them out, definitely hit the rewind if you're just joining today. Hit the comments after the show. Let me know, what do you guys think about today's show? Did you like Brian more looking into the option strategy, or did you like our outlook from Shawn Cruz? Definitely throw it up in the comments after. I'll go ahead and catch it. Like always, guys, we're going to continue building like always right here on Stock Market Movers. We're going to continue trying to bring those 2 experts daily, so don't miss it. Hit the subscribe button down below. I want you guys to be subscribed and hit that bell so you get notified the moment that we go live. I'll see you guys next time. And like always, please, please smash that like and support us as we support you guys right here on Benzinga's YouTube. We're going to keep going. Next up, you guys got Moon or Bust. So keep on pumping through. We'll see what happens when the cryptos, and I know they got a lot to talk about. Do they think it's coming back? I know Logan thought 30,000 would hold. I don't think 30,000 is holding. So go ask Logan, what happened with 30,000 and where does Bitcoin hold? I'll see you guys on at the close a little bit later today at 3:30. Smash the like before you get on out of here, and let's continue going only on Benzinga.